So the July CPI data came out today, and it showed a cooling in inflation that many perceived as a sign that inflation has probably peaked, and therefore the Fed won't have to necessarily hike rates so aggressively anymore. But if you look at it from a couple other angles, I'm not so sure about that. And one of them is the oil and the energy complex. So let's take a close look, looking at inflation and oil and how the chart might be telling a slightly different story that it's important to stay on top of. So before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so here I have my TradeStation charts open, and you can see there's lots of ticker symbols across the bottom, index ETFs, commodities, and more. So every quarter I do a deep dive of 20 of the hottest markets, and oil is one of those markets. So I have a really good feel for how it's moving long-term as well as near-term. So let's take a look at this chart that's a monthly chart of the continuous contract of oil futures. So if you're new to futures, okay, they're not like a stock that just has one ticker symbol and it stays that way, unless there's a big change in the company. Oil has a different contract actually every month. So right now, the oil contract is reflecting a particular month, but then it will what's called roll to another month. So if you're doing long-term analysis, it's a lot easier to just look at the continuous contract, and in TradeStation, you use the at or about symbol to capture that, all right? So looking at this big picture, we can see that we have my RSI power zones down below, my favorite momentum indicator, and candlesticks here that I do a lot of deeper work on. I call it my Gann candlesticks approach. And looking at everything together, here's a couple key takeaways, right? So let's kind of zoom in on what's happening most recently. So you can see that big picture, after oil recouped or got back over 50% of the losses off of the 2008 high, it just has been going sideways for months. So essentially since March, we're just like going nowhere fast on oil. Now, the average consumer at the gas pump didn't mind because prices started to stabilize, right? There's swings in between, but overall they've been living in this, call it $83 to $120 range, as opposed to the sharp run-up they'd experienced since the beginning of the year. Now, on the monthly chart, I don't see any new information on momentum. I do see that we are now back beneath that 50% retracement, but after churning around that level for so long, the importance of the 50% has kind of now come and gone. So I'm just going to remove it from the chart, all right, and focus in on a couple other levels. So to start with, I'm actually going to take this down to a weekly chart in just a second, but I want to show you that you can even connect highs of bars, guys, so you don't have to have big giant price swings. You can take two bars like that and look at the highs and see if that's helping you shape price action. You can take lows from back here, like the March low that we had, and then connect it to the April low and see if that's shaping anything. And you can see, all right, now we're getting even more of a distinctive shape to this recent range action, okay? So now let's take that to the weekly chart and analyze it further. So for this, I'm just gonna hop over to a prepared weekly chart, meaning it's already at the weekly time frame that every candlestick is 1 week of price action. The RSI is calculating based on weeks, not months, and more. Now you can see more definition, right? You can see more nuance in the price action since March. And we can see here that we have essentially this range high, like I said, around the $120 mark. Again, this is on the continuous contract, so the actual front months that you might be trading will have slightly different numbers, but it's the same idea. And then this $83 area. Now notice something on the weekly chart that's very interesting. And I'm going to tie this back to the inflation story right now. The RSI power zone showed that the oil continuous chart on the weekly time frame is back at the bull support power zone. Well, look at the last time we were at the bull support power zone. Back here in December. Oil went up from there, right? Look at the last time we were here. Before that, August of 2021, oil went up from there. So it is a bit concerning from the perspective of oil prices that we are back at that level because the oil prices look like they may have some room to go higher. And coming to that inflation data, a lot of folks perceived it as a right, like relief that maybe we have hit a peak in inflation, but there's a couple important factors to consider. Shouldn't the July CPI have shown an even better improvement in the inflation story given how low oil is trading, right? Why was it not better? That's because the oil prices are just one component that go into CPI. The biggest component, or at least one of the biggest components, is housing data. So over a quarter of it. And that data is showing that there's still plenty of inflation and higher prices in that arena. So remember that the CPI inflation data has subsets to it, and oil and energy is one area. And so that kind of flagged me as a little bit concerning. Now on the table, there's also this nuclear deal with Iran, okay? So the essence of it is that if the US and Iran come to a nuclear deal, then trade sanctions and all sorts of things that have been going on with Iran in regards to their oil supply will be lifted or amended or reduced. So in theory, there will be a whole pouring of supply into the oil market. And so if there's a pouring of supply, right, that's coming down from above, it will likely drive prices lower. Now, that deal has yet to be finalized. It's days, maybe weeks away from the sharing of this video, but that would definitely be a factor that might fuel action in oil. So you got to keep the news and these fundamental issues in context, because we're not just trading a chart in a vacuum, right? Especially when you're trading something like oil, there are really big reports and news that can move it. Okay, now, after having a little concern over where oil is, again, concern as a purchaser of gas, as a payer of heating bills, right? Another thing that concerned me is when you look at it in the daily chart. So for this, I'm just going to take this down to a daily chart on this time frame window, okay? And let's take a look here. I still have those range levels, the 120 area, $83 area, and I want you to see how the entire March 15th range is still being respected. And specifically, we have not pushed down and actually retouched the March 15th low all this time. The last attempt that was close was April 11th here, but didn't do it. And now what's going on between the monthly chart, the weekly chart momentum, and the daily chart momentum has me thinking, oil might want to climb higher from here. Now, not necessarily a lot, but there's room for it to edge higher. So you might kind of have your head go sideways and say, hey, Ma, you just mentioned this Iran deal, right? And that it's going to bring supply and that should drive prices lower. Yes, guys, that's absolutely the case, that could happen and is likely to be a huge force on prices. The thing is, guys, as I've been saying in a lot of my recent videos, so check them out, the news itself, whatever the news is, and whether it's good or bad, is just one thing. The market's reaction to the news, depending on what market you're trading, is a complete other story, right? There's the news and there's the reaction to the news. So if the rumors and the meetings and, political talk start to suggest that we're very close to that nuclear deal and that there will be all this oil coming onto the market, that excitement might actually change the dynamic of prices. But then the release of the news can have another response once it's actually official, okay? So just keep that in mind when you're navigating. Now we're gonna finish out here with just a look at the charts and give you some levels that are key to monitor, okay? I'm gonna do this analysis in front of your eyes as I do with my coaching students in Monthly Group Coaching Live. Now, in a monthly group coaching setting, because folks have my educational content access, I go deep in terms of what techniques I'm using and more. But here we're going to just take a look at some key levels. All right, to start with, I'm going to actually mark off this high from July 29th. That's a lower swing high. And swing highs, price highs, and bar highs are three important types of highs that I teach in a variety of my courses. I really get deep into that in my Winning Price Action playbook as well. So that price high and that swing high, it's both in this case, is really important to kind of keep pressure on oil and keep it moving lower, all right? But if it gets taken out and we see the contract trade above it, then we might see a return to that 120 range and the other high that's very close to it here at 118.44. So just gonna move that label out of the way so you can see those piling up there, those two highs. All right. Now, ahead of that, okay, before we even get to 101.88, we've got to get above 96.47, right? It's a high in the way. But there is room from a technical view here for oil to roll over and move lower from where it is now. But as I mentioned, the very important support here, not only at 83.62 it is, but at 84.35, which is extremely close to that multi-month low. This is a very important support area, and you need to see a real good push below it. I would like to see at least 2 daily bars posting closing candlesticks below both of those levels before I would get excited that oil prices might come down, okay? So that's really the essence of it. And then I'm going to be going deeper, like I said, with my students in our sessions on looking at the forecasts around oil. So the meeting of price and time to figure out exactly when these events might take place on the chart, looking more closely at momentum and more. So I hope this was a useful guide to you about where oil's been, where it's likely to go, and how it fits into the inflation story, which is extremely important to monitor because the inflation situation, if you will, is infiltrating to everything going on economically, especially how the Fed and Jerome Powell are going to look at dealing with potential rate hikes, not just in the coming months, but into 2023 as well. Awesome. Well, remember to subscribe, like, comment down below, and follow, and join me in my tribe if you haven't already, and I'll catch you on the inside. You can sign up at the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.